Welcome back, navigators. In today's video, we're breaking down the barriers to successful ETF trading and revealing simple yet highly effective techniques that anyone can master. Imagine yourself trying to cast the net into the vast ocean of investment options so that we catch the best ones. The world of investment is like a colossal ocean filled to the brim with diverse species of opportunities. It's teeming with life, and each species represents a different form of investment. From the nimble small-cap stocks to the gargantuan blue-chip companies and the elusive, mysterious cryptocurrencies lurking in the depths, it's a veritable buffet of choices. It's beautiful, it's exhilarating, but it can also be overwhelming. You stand on the edge, casting net after net, hoping to reel in a bountiful catch. But the ocean is vast and unpredictable. You could haul in a net filled with valuable pearls, or you could end up with a pile of worthless pebbles. It's a gamble, and it's not for the faint of heart. But what if there's a way to navigate this vast ocean with a little more assurance, a little more confidence? Enter the exchange-traded fund, or ETF for short. An ETF is like a sturdy vessel designed to traverse this vast ocean. It's not just a single investment, it's a collection of different species, all bundled together. So what do they offer? ETFs offer flexibility. You can buy and sell them throughout the day, just like individual stocks. They're accessible, you don't need a fortune to start investing. Just open your brokerage account, search for the chosen one, and hit the buy button. Also, they provide diversification. Your investment is spread across a range of companies, sectors, or even countries, reducing the risk of your entire catch being wiped out by a single storm. So here's the crux of it. In a world where investment choices are as vast and varied as the ocean itself, an ETF can be a valuable tool. It allows you to cast a wider net, to diversify your catch, and to navigate the turbulent waters with a little more confidence. Now, having introduced this vessel, you might wonder what makes ETFs so attractive for investors. Well, imagine you're at a grand feast where each dish represents a different company. You could pick and choose, tasting each dish one by one, but that would take an awfully long time and might leave you with a few unsavory experiences. Instead, you could opt for a platter that offers a small portion of every dish. This is what we call diversification, and it's one of the primary advantages of ETFs. They allow you to invest in a variety of companies, small caps, large caps, mega caps, sectors, semiconductors, technology, financial or healthcare, just to name a few, and even countries, reducing the risk of having all your eggs in one basket. Now, think about a bustling marketplace. Sellers and buyers haggle over prices, goods are exchanged swiftly, and transactions are completed in the blink of an eye. This is the essence of liquidity, another significant allure of ETFs. They can be bought and sold throughout the day at market prices, just like individual stocks. This means you have the flexibility to react quickly to market fluctuations, providing a level of control that many other investment vehicles lack. Lastly, let's consider a shopping trip. You have a list of items to buy and a budget to stick to. You could go to a boutique store and pay a premium for each item, or you could go to a wholesale store and get everything you need at a lower cost. This is where the cost-effectiveness of ETFs comes into play. They typically have lower expense ratios compared to mutual funds because they passively track an index, S&P 500, Russell 2000, or Nasdaq 100, for example, rather than actively managing investments. Thus, you don't have to pay for too much human intervention, and you can keep more of your investment returns, which can make a significant difference over the long term. In essence, ETFs offer a range of investment options, allowing investors to buy a bit of everything without overexposure to a single or reduced number of stocks. With this understanding of ETFs, how then do we navigate these waters effectively? Just like a seasoned captain, you need a plan and a strategy to sail the high seas of ETF investing. One of the most effective strategies is diversification. It's the equivalent of not putting all your eggs in one basket. By spreading your portfolio investments across different types of ETFs, you reduce the risk of any single ETF's performance significantly impacting your overall portfolio. In the same breath, rebalancing is a critical part of managing your ETF portfolio. It's the process of realigning the weightings of your portfolio's assets. Furthermore, remember that markets shift, and so will the weight of your investments. If one ETF is performing exceptionally well, it may become a larger part of your portfolio than you initially intended. Rebalancing ensures that your portfolio stays aligned with your investment goals and risk tolerance, returning to initially considered percentages. Another strategy is dollar cost averaging. This involves investing a fixed amount at regular intervals, regardless of the ETF's price. Over time, this strategy can help mitigate the impact of market volatility. It's a bit like catching fish with a net instead of a single line, reducing the risk of missing out when the big one comes along. But as with any financial venture, it's essential to have a clear understanding of your risk tolerance. Are you a cautious investor, preferring slow and steady growth, or are you more adventurous, willing to take on more risk for potentially higher returns? Your risk tolerance should shape your ETF investment strategy, not the other way around. And it would be wise to include in your portfolio some bonds and cash holdings as well. Lastly, and perhaps most importantly, you need to have clear investment goals. Are you investing for retirement, a new home, or your child's education? Your goals will help guide your decisions, from the types of ETFs you invest in to your strategy for managing your portfolio. So, there you have it. The world of ETF investing may seem vast and intimidating, but with the right strategies and a clear understanding of your risk tolerance and investment goals, it becomes far less daunting. As with any journey, there are potential pitfalls to be mindful of in ETF trading. And just as the sailor must be wary of the hidden reefs below the surface, so must the investor tread carefully in the world of ETFs. One common mistake is the temptation of chasing performance. It's easy to get dazzled by the shine of a newly launched ETF that's performing well, but remember, past performance is not indicative of future results. Investing in an ETF merely based on its recent success can be as reckless as steering your ship into uncharted waters without a map. Another pitfall is neglecting to rebalance your portfolio. Just as a ship needs to maintain balance to stay afloat, your portfolio needs to maintain a balance to remain healthy. Regular rebalancing can help you stay aligned with your investment goals and risk tolerance. Ignoring this crucial step can lead to unnecessary exposure to risk and potential loss. Look regularly at the initial percentages for each component of the portfolio and sell those that exceeded theirs, while buying the ones that lag behind. Misunderstanding the ETF structure is yet another mistake. ETFs are not all created equal. Understanding the underlying assets and the structure of an ETF is as essential as knowing the depth of the waters you're sailing in. To avoid these pitfalls, there are two key navigational tools at your disposal: due diligence and patience. Due diligence involves researching your ETFs thoroughly, understanding their structure, and keeping abreast of market trends. Patience? Well, that's the ability to weather the storm, to keep calm and not be swayed by short-term fluctuations, but to keep your eyes on the horizon and your long-term goals. In the world of ETF trading, knowledge is your life raft, and patience is your anchor. Just as the seasoned sailor respects the sea and its unpredictable nature, so should you approach ETF trading with caution, respect, and a willingness to learn. That's all for today. Until next time, take good care of your finances, navigators, and don't forget to subscribe and share if you found any value.